Welcome to Barchart's series of educational webinars designed to enlighten you on a variety of trading ideas and concepts, to inform you of the features and tools Barchart provides related to these concepts, and offer you some trader's insight to help you make a more informed trading decision. Today's session, spotting market trends with the eMACD, your guide to timely buy signals. Now, the the MACD Oscillator, which was developed by Gerald Appel, and this is the moving average convergence divergence, is just a variation of a moving average crossover system, where a longer-term moving average, and typically is 26 periods, is subtracted from a shorter-term moving average, typically 12 periods. And that value oscillates back and forth above what is called the zero line. Now, if the value is positive, that means that the average of price over the past 12 periods, that short-term moving average, is greater than the average price over the past 26 periods of the longer-term moving average. Now, this signifies an uptrend. A second line, which is called the signal line, by the way, the first line is called the MACD line. A signal line is created by the calculation of this moving average's value of the difference between the long and short moving averages. In other words, an average of averages. And when the faster MACD line crosses from below to above the smooth signal line, this generates a buy signal. Now, Barchart's eMAC new buy signal page identifies large cap stocks where the eMACD indicator has produced a new buy signal. Hello, everyone. My name is John Rowland, Barchart Senior Market Strategist, and I will tell you that not all buy signals result in profits. And we're going to add further inspection of the histogram, which is a component of the eMACD study. We're going to look at complementary technical analysis and proper bullish conditions that can dramatically improve the probability of a positive outcome. So stick around as we examine the eMACD oscillator, its components, interpretations, and how I screen on potential candidates, what clues I look for finding key turning points and prime buying opportunities. Now, before we get to all that, please welcome our moderator and Barchart's project director, Jean Baker. Hello, Jean.
Hi there, John. How are you?
I'm doing well, and yourself?
I'm doing great here. Thank you. Thank you for asking.
We're saying in the green room, we're talking to each other, we can't believe how fast October has arrived this year, huh?
I know. Pumpkins are beginning to show up at the stores, and yeah, leaves are beginning to fly, but
start looking for my Halloween costume.
Costume?
Yeah.
Okay, what are you going to be? I want to know.
I don't know, but I did volunteer to take my granddaughter out trick-or-treating this year. So I think she is going to be a ballerina or a princess, which I think is kind of the MO for 3-year-old girls.
Yeah, I think so, yeah. Cute. Maybe it goes John the Prince then.
There you go.
All right.
All right, you ready to get started?
Yeah, go ahead.
Okay. So just a reminder that today is for educational purposes only, and decisions to buy, sell, hold, or trade securities or commodities or other investments involves risk are best made on the advice of a qualified financial professional, and under no circumstances shall we be liable for any losses or damage that you incur as a result of any trading or investment activity that you or anyone else engages in based on the information or material you receive through Barchart.com and our services. Okay. So as I said in the mention in the opening, the eMACD oscillator is a calculation by, well, the MACD line is a calculation by subtracting the longer term 26-day exponential moving average from the shorter term 12-day exponential moving average. The E in eMACD being exponential moving averages. The signal line is then created by calculating a 9-day EMA from the result of the MACD line. Now, the interpretation here says that a buy signal is generated when the MACD line crosses above the signal line. This creates a positive divergence between the MACD line and the signal line and creates a bullish crossover buy signal. Now, today's session, well, first of all, here is today's session that's on our website on webinars. But in past sessions, we've looked at how this buy signal can be used to identify significant turning points as markets move from downtrends to uptrends. Today, our jumping off point from our investment page, and we'll show you how you find that in a second, we're going to be looking for buy signals in stocks that have already exhibited uptrend tendencies and where the probability trend is our friend. So let's get started here. And so I'm on the eMACD buy signal page. And if you don't know where you can find that, you go under the investment page, and there it is, eMAC buy signal page. And here's kind of that definition of what we just went through. So what it does say here is there's a tip here. It says, let's view this in our flip charts. And we're going to use our daily chart, and we're going to apply our bar chart template, eMACD plus volume. So let's do that. So let's go to the beta charts. And I might swing between beta and our older version flip charts. But if you don't know how to find or change your templates, it's up here in the right-hand corner. And it might just say templates if you haven't done this already. And you click on that button, and where it says categories, you have your own creation, your own templates. Again, you have to have an account with us to create your templates. But here's bar chart templates, and these are some default templates. And here is the eMAC volume. And we're going to apply that to our flip charts. And what do you get here? Well, first of all, you get a 1-year chart on a daily. So the eMACD E signal can be derived on an intraday basis, but the actual signal itself is based on end of the day closing prices. So in other words, what I'm saying is that you could get a buy signal intraday, and then let's say that stock price moves back, and then that buy signal might disappear. But if you look at this at the end of the day, that is where you're going to get that true eMACD signal. So let's first look at the MACD line, and that is represented here by this black line. Again, remember, this is the difference between our long and short moving averages. Now, if I go down here where it says MACD exponential, and I click on that, that is going to open my defaults. And you can see that the 1 period, or the first period, is the short term, and the second period is the long term. Now, you can change these periods depending on your desire, or you might have another set of parameters that you want to look at. But the default 12 to 26 is based on studies or the development by the creator, Gerald Appel. Now, Appel did come back and say that when he looks at the NASDAQ, he likes the 19 and 39 settings. So the second line in here is our pink line, and this is our signal line. This is that moving average of a moving average. Notice how much smoother it is than our more erratic MACD line. So that is the second component of our MACD study. Now, the third is something called the histogram, which you can see here. And the histogram is a representation, a visual representation of the difference between our MACD signal line, our MACD line, and our MACD signal line. Now, if the histogram is brown, and it's below this zero line, which is this middle portion right here where it turns brown, that indicates negative momentum, as the 12-day period average is falling faster than the 26-period average. If it's in aqua and it's above the zero line, then that means we have positive momentum, that the 12 period is now above or increasing faster than the 26. Now, the location of the MACD line and signal line as a relationship to our zero line is critically important. So if we are below the zero line, and you can see it here. Now, this might not be a great example, but let me see if I can find a better example for today. Let's go to this chart here. Yeah, this is much better. So if I have my signal line and my MACD line below the zero line, so this is indicating we have a bearish tendencies. In other words, we are in a downtrend. Now, in the previous webinars, we talked about looking for bullish momentum in downtrends. And you can see here, this is where we have a change in momentum from a negative to a bullish, right? Bullish momentum, but our signal line and MACD line are still below the zero line. So that's what, if you're interested in how to use that signal, look at those other two videos. What we're going to look for is when our signal line is above and our MACD line is above the zero line. Again, this now is a bullish tendency or an uptrend. And so we're going to concentrate on these markets as we move from a bearish momentum to a bullish momentum in a bullish tendency environment. In other words, an uptrend. Now, again, let's go back to Affleck here because I think it really shows this better. So here you can say, a couple little bearish moments of bearish momentum, but we're still in above the zero line and we're in an uptrend. Now, today we got a buy signal where we've had, the market has been trading kind of sideways. And now that, that momentum has been negative, right? This kind of sideways pausing action, and now we're getting positive momentum that created that buy signal. Now, let me just kind of explain here is that this is kind of the nuance of the eMACD indicator is that, just because we have negative momentum doesn't mean that necessarily we're in a downtrend. It just means that the price action is slowing, or that the price action might be falling, but the trend is still in an uptrend. So we can start looking at a couple of different ways to help us define better candidates for this particular signal. So first of all, unfortunately for today, now Affleck is definitely a good example of a good candidate where we have a nice strong uptrend, and then we have this pause in momentum, and now we're getting increase in momentum as a potential buy signal. Again, a favorable probability, a favorable result. But unfortunately for me, today is if we looked at a lot of the candidates that are on our screen, what we'll find is a lot of them are, more of this kind of this bottoming where our signal line and MACD line are below the zero line, more of a bottoming formation, or that, these markets are in downtrends. So that's trading. That's what happens sometimes. So, I can't uh, prevent that from happening. But let's go and look at a market that just recently, a couple of days ago, that did give us a buy signal. And so here we can kind of look at this from a more of a trend perspective. Is, we can see here a price action is in an uptrend. And notice how we do have those brief moments where we have negative momentum, but we're still in the beginnings of, a uptrend, or this kind of this idea. If we think about what an uptrend is a series of higher highs and higher lows. And between making a higher high, we have what we call a correction or a retest, or what we call a drawback. So as we make higher lows, usually the market is pulling back. So what the eMAC indicator does, it helps us identify this transition from where we have these drawbacks or these pauses in price action before our trend is re-engaged. And so this is a really good example. So here you can see we got a buy signal here. We got a buy signal here. We got a buy signal here. And these were all just as our market is impulsing, as our trend is continuing to move forward. Now, another part of this process of looking for better candidates, and why we've added the volume pane to this template, is we want to kind of see two conditions, and one or the other. Either as we're getting buy signals, we want to see rising volume, because rising volume or volume can help us confirm price. Or when we have one of these drawbacks or consolidation points, we want to see a spike in volume. Typically, what we'll see here is we might see a spike in volume where, you might see a lot of sellers have stepped into the market and said, hey, I'm taking profits, and they're getting out. And once they're gone, then there's no more pressure on the market, and allows the market to go up. Now, if you're not familiar with how the volume chart reads here, is you notice that we do see greens and reds and an occasional blue. So it doesn't really matter what color the bar is, right? We just want to see a rise in the bars. But basically, a green bar means that that is an up volume day, or in other words, that the stock price went up that day. And a red bar is a down volume day, which means that the stock price closed lower from the previous day, or a down day. If it's a blue bar, then it just means the market was unchanged for that day. So looking for increases in volumes or spikes in volumes is another way to look for some better candidates. Now, there are some other things that we're going to discuss, and some of them will be, we'll look at something, for instance, is what we call the historical level. And this is going to be more about risk management. We're going to get a little bit more into that. But here we can see that our MACD is rising, right? Our momentum is getting greater as, right, where, our stock price is going higher. And again, you can see here we had a little bit of a buy signal just a few weeks ago, but again, today, a couple of days ago, we did have a little bit slight negative momentum, not a lot of negative momentum, but really what our market was doing was just kind of pausing. So we'll kind of look at this from a historical perspective. In other words, if I'm getting into very high momentum levels, and I look at it over historically of previous high momentum levels, that could be a caveat for me. But we're not there on this example just as of yet. So let's go back to our original set of candidates. So, how can I filter this group of candidates, right? It looks like it's about 50 or 60 or so. How can I screen on these candidates to filter out the poor candidates and focus on the higher probability choices? So what we can do is we can screen on this list. And notice that once I do that, it's the first screening is going to be our eMAC new buys. But, I can add other filters, and, I want to be very simple about this. And so what are my goals? I got to think about what my goals are, what I want to try to find. First of all, I want to find markets that are, in an uptrend or rising markets. Maybe, I want to kind of concentrate on those, again, like I said, that where we've had a pause in the market, or maybe there's a little bit of this drawback, that negative momentum. But overall, I want to see a very positive environment. So again, there are a lot of different elements that we can add to it. But again, I wanted to make this very simple. Now, one of the features about being a subscribed member is that you can create saved screeners and keep them for yourself so that you can do this process once and then go back and screen every time. So I do have two eMAC screeners. One is on new buys. And again, if you want to know about the new buy screener, I would encourage you to watch those other videos. But we're going to look at the eMAC webinar screener. And again, if you can see here, I've only added two conditions, right? Very simple. So what is the first condition? Well, the first condition is I want to find those markets that are making new 3-month highs, but not necessarily a new high today, but over, let's say, the last week. Again, you could change this and say, let's say over the last 2 weeks or over the last 3 weeks. And this has two factors to it. First of all, the price theory says that if a market is making a new 3-month high, probability is much higher that it will continue for another 3 months. And then the second factor here is if I've made this new high, let's say in the last week, well, now what I'm doing is I'm looking at those candidates that maybe had a price thrust or impulse and now has paused and regathered energy as we're creating that new buy signal and charging forward a new positive momentum. The second condition that I'm going to add is looking at the 20-day moving average above the 100. And again, we think about this in terms of what I'm trying to find is a short-term moving average is above a long-term moving average. Now, this term, when we do this process, is called stacking. And stacking guarantees that I find a positive price environment. So if I go to see results, and that list of whatever it was, 50 or 60 or so, now come down to, just a couple handfuls here, 7 candidates. Now this again, when I came on this morning and I was doing my prep, this was up to about 10 candidates, and then as the day has gone on, the number of candidates has dropped off. But Affleck is still there, thank God. But let's look at these results. So again, I can go back into my flip charts, and this time I'm going to use the older version of flip charts, not our new beta versions. And again, I can come back in here, look on my bar chart template, and there's that eMAC volume. And so one of the things I'm going to look for first is that rising volume after a buy signal, rising volume, or spikes in volume as we're having that negative momentum, a spike in volume prior to the new buy signal. Now, some of you might be familiar with the term negative divergence. And what negative divergence really is talking about is you might be making a new high in a market, but your indicator will not be making a new high. And that is potentially a negative divergence. Now, negative divergence actually occurs when, in the MACD case, is when the MACD crossover is to the negative, not to the positive. So I want to kind of just show this out because I know there's going to be a lot of questions like, oh, your momentum is a lot lower than you were, when you made, this previous high. Is that a negative divergence? No, it's not. But here's a better example. So notice here you can see price is rising and we make a high, right? And then we make a higher high, right? But what is our MACD and signal line and MACD lines doing? They are turning negative, right? They are still turning negative, right? They're not swinging upward as we are seeing over here or as we're seeing in the example of ACFLAC. So there's a big difference between what is really truly negative divergence and what here is really this is actually positive divergence, right? Our MACD line is now swinging upward, right? Opposite of the previous momentum. So that was a good example of that. So again, this is where we can kind of help us narrow down some of the candidates. We're going to look at volume. We're going to look at that positive momentum. But I can also add some complementary indicators or technical analysis to help me with my process. So again, I'm going to come back in here where there is the templates, and I'm going to open that up. And these are templates of my design, and I've shared a lot of these in certain webinars that are unique to those webinars. Or templates that are unique to those webinars. So here is the eMACD signal template. And what I've done here is I've added a few different technical analysis. And so let me just kind of show you where that is for a second. Let's go into our tools, and here I'm looking under my templates, chart templates, and here is my eMACD signal template, and here's the studies. So what I've done is I have my eMACD oscillator, that exponential oscillator. I've added a moving average, exponential moving average of 5 periods and 20 periods, and I've added the relative strength index. And again, this is where you can find a lot of trend following type of studies to add to your templates. And then I can save that, and again, there's videos on how to do that. So what I'm going to look at is I want to see that stacking aspect. Again, I want to see upsloping moving averages, right? Again, here's our red line represents our 5-day moving average. Our blue line represents our 20-day exponential moving average. I want to see them stacked. In other words, I want to see the 5 above the 20, right? I don't want to see the 5 coming from below or even anywhere near, or if they're trading flat or sideways. I really kind of want to see them upsloping as well, and in correlation with what we're starting to see with our new buy signal. But we can also look at this in terms of a larger picture. In other words, I want to see that positive price environment, but I want to also make sure that I'm not fighting maybe a higher time frame trend. So what I can do is change my perspective. And here I'm going to go to a 3-year chart, which now defaults to a weekly chart. And again, here we can see that, my 5 period here is a 5-week period, and this is my 20-week period. These are stacking, and they're stacking very well here, right? We're seeing that the 5 is, has diverged far from the 20. So that is another positive sign of a positive price environment. And again, our MACD is showing elevated momentum at the week level. What I don't want to see is these are trading sideways, or that our MACD is not in a positive environment. That could be a signal that I am fighting what might be a higher time frame trend. But again, most of these are going to look like this. Now, the other aspect of this process is, as I'm doing my analysis in terms of the next input, which is my RSI, I can use these values, these moving average values, in risk management. So let me show you first the RSI, and then we'll talk about risk management. So next thing we're going to look at is my RSI. And so what I want to do is I want to make sure that I have positive momentum in our RSI. And now if you're not familiar with the relative strength index, what typically happens is that in upsloping markets, what you'll see is that there will be a shift in the RSI. It will shift upwards. And in strong uptrending market, as you can see here, and if we go over a longer period of time, notice where our MACD signal, where it went positive, again, confirming that we're in an uptrend. From that moment on, notice that our RSI, rarely will you see it drop below the 50 line. Now, maybe it might get down to the the mid 40s or something like that. But typically in an uptrending market, you're going to hold that 50 line. And that is another confirmation that you're in an uptrend. So I want to make sure that my RSI has not dipped too far, but also I want to see it in this positive vein. The caveat is I'm going to be careful for looking at overbought conditions. Now, most novice traders, or those who are starting to use RSIs as a technical indicator, think that the overbought is a sell signal. That is far from the truth. It's just telling you that price is accelerating compared to previous price action. And you can see that RSIs can remain overbought conditions for a long period of time. So I'm not worried about buying in an overbought condition. I just need to be a little bit more restrictive or use a better risk management, because there is that potential that price could reverse in a shorter period of time than what we are currently witnessing. So that's where these moving averages are better placed in my process. And that process would say that if I'm in an overbought condition, then I'm going to use a much tighter stop. In other words, I might use the 5-day moving average versus, let's say, the 20-day moving average for my risk management stop. Again, if I'm looking at a higher time frame and I'm in the overbought condition for the RSI, I'm going to probably use a much tighter stop, the shorter term moving average, to manage my risk. Now, if you think about this, this is a 5-week moving average, and if price reversed and closed below that, that is probably a good sign that we're going to see a little bit of reversal in price action. But if I'm not in the overbought condition and I'm a buy and hold trader, or more an investment trader, then I might use, the lower moving average is my risk management tool. So I wanted to kind of give you an example of that. Again, so here's Exelon. This is a stock that has been in on the news as of recent, but you can see nice uptrending. And again, look at it. Our MACD has gotten to a very historical low, but the momentum is still positive. We got a little bit of a buy signal just recently, and today we got a couple of days ago we got a buy signal. Notice that we have a rise in volume after this buy signal and a spike in volume during that last pause or drawback in the market. So this is our default MACD template, but let's change it to the signal template. And again, right, notice what we're seeing here is that we're not getting into the overbought condition. That's a good sign. And again, look at our price action and our RSI, right? Again, staying above 50 and confirming to us that we're in an uptrend. Now, the next caveat I would be more concerned about is this momentum, this momentum on a historical level, is this something that I need to be concerned about? In other words, has price moved far in a short period of time? Now, historically, we're not really at those peak highs. We're getting close, but we're not there. So that is a little bit more comforting or more confident that we should see a continuation in price action for this particular candidate. Okay. So I'm just checking my notes here for a second. Give me a second. So we talked about the overbought conditions. We talked about our risk management tools. So I want to move on to some other things, but I do see a couple questions, Gene, here. So let me pause for a moment and read a couple of these questions. So there's one that I did see that I thought was kind of relevant. I want to make sure that we answer that one before we move on, right?
While John's reading through those questions, I just want to remind everybody that a lot of the templates that John is showing you here are available in the PDF slide format. It's on the archived webinar page. So you'll be able to go there, see how he's created his templates and apply to your own charts that way. Also, I had a couple questions about whether this screening on the eMACD page is available, for which level of membership you need. You need to be at least a free member in order to use our stock screeners and screen on that investing section page.
Okay, thanks, Gene. Yeah, that is definitely important. But if you want to create templates and save screeners, then you have to have a more advanced membership, correct?
Well, free members can save one template. They can save one screener. It's kind of limited with a free membership, but your plus membership and obviously the premier membership with unlimited number of resources, that provides you much more flexibility as you get into looking at all of these different trading signals and wanting to save your customized data.
All right, so let's see. Whoop, a couple of these questions jumped away. Here we go. Let's go back. So the question was about the 26 and 12 period. I think we had addressed that. There's a question here about MACD levels on a scale that are historically reliable. So every market's a little bit different. You gotta, again, it depends on the price, right? If you're looking at like a $500 stock, you might see MACD levels that are a lot higher because just the values are greater, right? But again, I think this was Neil asked this question. Neil, it's more about a relevance of what is unique to that individual asset or equity. So again, looking at it from a historical basis of the individual, not as, let's say, something like a value above one is elevated. That might not necessarily be true. So do you look at the histogram more often or the signal line crossing? So it's a combination of both, right? What we're trying to discover is that change in momentum, which the histogram is going to show us, but what we're going to get from that confirmation of the MACD line crossing the signal line. Again, the critical significance is we want to see both of them in a positive environment. In other words, both of them above the zero line. Now, Appel did say that you could look at that as a potential buy signal as both of them get above the zero line, but he wasn't very fond of that. I think I remember reading in his book. So again, a follow-up question is how often do you use weekly MACDs versus dailies? Again, this is more of a process of any market that I'm looking at, not necessarily this particular signal, but again, looking at higher time frames can influence lower time frames. So I want to make sure that my higher time weekly is in concert or is supporting the signal that I'm getting at the daily level. Tatalia asks, MACD indicator is a duplication of the chart. What is the distinction that I can look for in the MACD that will help me understand trend? I think we answer that. Again, looking at our signal line and our MACD line above the zero line. So the question is, why would I use the 5 and 20? And again, you don't have to use the values that I use, but again, 5-week moving average, to me, again, for a risk management tool or a 5-day moving average, right, is 1 week. That really is telling me if price falls below there, that might be is where I'm going to start using some stop risk management. In other words, either get out of the trade or get out part of the trade, or maybe because of the way price action is trading at the moment, it's fluctuating on that moving average. I might wait for a better environment. So it's really more about risk management. And what I mean by stop is just, if price falls below, do I exit this trade? Is this trend over? And that's how I can use that. All right. So Sunny asks, the question is, depending on how we interpret the chart and decide to buy or sell, is there any way to chart generate buy or sell on certain fixed criteria? Again, watch the other videos that I've done in past. We look at both positive and negative divergence. We look at both buy and sell signals. I will tell you that if you're in a positive price environment and you get a MACD crossover that goes negative, that is not usually a good, reliable indicator as a selling opportunity. But we do talk about that in those other webinars. Okay, so let's move on. Let's go back to our stock screener. And again, those featured candidates, right? So what I can do here is once I've defined what features I want to use or what parameters or filters I'm going to use, and I get that result, I can save that screener. And again, one of the reasons to be a premier member is I can save a lot of screeners or an unlimited amount of screeners. And I can have these sent to me on an email on a daily basis. Now, typically what I do, because there might be actionable trades as the eMACD screener is being identified today, I'll have it sent to me at midday. Again, then I can start doing my risk analysis. Maybe am I going to do a long-term investment, or am I going to do a momentum trade? I'm going to use options, a lot of variety of other things. The screener is just the beginning of the setup process. But again, like I said to you, that you could see price action move favorable that would give you a positive signal, but then at the end of the day, the stock pulls back and then that signal would have disappeared. So that's why it's important for me to get it at the end of the day. And again, maybe not every day I'm going to have an opportunity to look at the market. I might not be sitting in front of my screen. I have a regular job. Then at the end of the day, I get this screener. Then I can go through the potential candidate and say, hey, this is a candidate that I want to look to add to my portfolio, or this is a candidate that I'm going to look to put some type of options trade on, or I believe that there is some positive momentum in this trade and I'm going to play this trade. Let's say I get a signal on a Monday. I'll play that trade out Tuesday, Wednesday, Thursday, and then maybe I'll exit that trade on Friday. So, okay, so if you're starting to feel the good love behind this idea of this thought that the eMAC buy signal is really just the process of how we define an uptrend, right? Think about an uptrend. Again, an uptrend is a series of impulses and retests, or impulses and drawbacks, and then another impulse. And what the eMACD signal does, it helps us identify as we transition from that retest drawback to the beginning of that impulse. So if you rely on this and you believe in this concept, one of the cool things that we can do now is we can go back, let's say in our investment page, and we can use that process as a potential screener. So let me show you exactly what I'm saying. So, I was kind of looking at it this morning. Let's just pick cyber security stocks. And cyber security is definitely one of the categories of stocks that have been very, very popular of recent. So I'm going to go in here and I'm going to screen again. And again, I'm just screening on that data set, those cyber stocks. But now I believe in this idea of relying on the eMAC signal. So I'm going to go down to where it says opinion indicator. And here's a lot of different opinions indicators. These are all technical indicators. And here you can see the 12/26 9-day eMACD. And what I can do here is there's a lot of variations on this particular signal. But the two that I probably would look at is either new buy signals, which we already have, right? We already have that in our investment page. But I just want to find those cyber stocks that have already signaled buy signal based on this indicator. And again, there was a question of could we find sell signals, and that would be a way to do that. And so I'll look at that result. And that big list of all these cyber stocks, I get a few different candidates that I can go into my flip charts and do that process. And again, Cisco is one that's always kind of interests me. And right, so let's load back, a little hindsight. Hindsight's 2020. And again, this data fitting basically. But again, here we have, let's walk through our process. Here we have our eMAC line and signal line that are above our zero line. We're in a positive price action, right? Are we in an uptrend? Yeah, I think we can make that case. We had a negative momentum, right? Price impulsed, drew back. Where did it draw back to? Well, on a technical basis, if we look at old resistance becomes new support. We drew back right to that old resistance. And then we got a buy signal. Was our RSI overbought? No, it wasn't. And then we had a nice little bit of a momentum move. Let's see what it says on our bar chart template in terms of our volume. And again, did we get, looks like we got a spike right as we got the signal. I would really like to see a little bit more of a rise in volume as we are moving through this. So maybe in this case, the volume wasn't as supportive as we would like. But let's look at this in terms of our weekly chart, right? Positive momentum, right? Positive. Now we finally got back above the zero line here, positive momentum. So that would be a good indication as well. If I go to my MACD signal on the weekly, right? Again, positive momentum and, not overbought on the RSI. So this is a great tool that we can use as as one of many other filters to help us in our process. Okay. All right. All right, Gene. So let's see. I see a couple more questions you sent through that I'm kind of getting through here. Michael asks, do you ever jump in early and buy on a pre-cross? No, Michael, that is not my process, right? So no, I do not do that. Okay. So let's go back to our slides. And let's kind of do a little quick review. Remember, our MACD histogram should show a negative momentum without our MACD line and our zero line, excuse me, our signal line below the zero line before generating a new buy signal. Short-term moving averages, right? We wanted that upsloping stack quality, that positive price environment. And again, remember, MACD is really kind of a moving average crossover. Again, if I'm using some other moving average time periods, 5 and 20 in the example that I showed you, is we want to make sure that that bullish crossover is probably prior to our new buy signal. And that certainly would confirm our momentum. Again, I would look at this at multiple time frames. The more time frames that are signaling that, the more confidence I have in my decision process. And our relative strength, again, remember there's this shift that happens that, we should stay above 40 in uptrends, but again, as long as we stay above 50, and that the time of that bullish signal or that buy signal, we should see bullish momentum without being in the overbought. I'm not afraid to buy overbought conditions in RSIs. Just want to make sure that there's plenty of price movement to run. There's no roadblocks ahead of me. In other words, resistance above, or that I have supporting evidence from multiple time frames. And then again, our volume criteria. We want to see volume or volume averages should be rising during and post eMACD buy signals. But again, spikes that precede, especially in those consolidation, drawback, pause and times, that could be a really good, excellent confirmation that the next new buy signal is going to give you a higher probability. All right. So this is what Gene was talking about. These slides are attached to today's webinar. Here is that additional screener that I've been using. Here's that additional template that I use. And so let's get to some takeaways. So remember, the MACD oscillator is a trend following momentum indicator that often helps us confirm upcoming price or trend changes. The buy crossover signal occurs when the eMACD line, that black line, crosses from below to above the signal line, the pink line, and that we're looking for candidates whose MACD histogram turns negative, brown, while the signal and the MACD lines remain positive, okay? And remember that the eMACD signal alone is not an absolute, right? It's not a catch-all. I can tell you that not all buy signals are the same, but it does work with other complementary technical analysis. And I just gave you a few: volume, RSI, multiple time frame analysis of sloping averages. Are these set in stone? Are these the only ones? No. If you have other technical analysis that you rely on, that you believe that helps you define trends, a good example might be like the ADX. Then yeah, I would encourage you to try a lot of different indicators that will help you. Look at maybe some volatility indicators. For instance, like Bollinger Bands is one of my favorites. If you get a crossover in your Bollinger Band, or your Bollinger Band, and you're breaking out of a range, that could be a positive, supportive indicator to your new buy signal. So Wayne, one of our regulars, Wayne asks, could you integrate the MACD with the TTM squeeze? Yeah, Wayne, I actually looked at today when I was trying to do this example of how you can use it, and let me go here and do this. I did look at that, Wayne, and I hadn't thought about this, but yeah, I did go into the TTM squeeze, and I was looking at not only just the triggered squeeze lanes, but I was looking at long squeezes, squeezes that had just occurred, and then said, well, let's just screen on, that opinion indicator and see what would happen. And I did get a lot of candidate. Well, I did not get a lot of candidates on that one. I think I got some better ones on this one. Again, let's look at our flip charts. Right. So, I mean, I'm just going to go through a lot of these, Wayne, real quickly, Wayne, but, again, look at the chart, it's breaking out. So yeah, I think this is might be a good tool. And I might be adding this to that TTM squeeze, and maybe just an additional filter. Now, a lot of them were flat here, Wayne. So yeah, go ahead and give that a shot. Maybe you see if you like that one, right? Okay, so let's just do this, Gene, because I'm kind of lost my track of thought here. Wayne had such a great question. All right, next week we're going to do a webinar and beyond the gamble, or how penny stocks to trade penny stocks for consistent success. So I'm going to be very frank here. This is not about looking for those home runs or those lottery tickets. This is about learning how to trade penny stocks on a very consistent basis, using rule-based trading ideas and also strategies that maybe can be more unique to penny stocks, those techniques, and being more consistent in our process. And then that consistency over the long run will help us find those home run trades. So in other words, I'm not looking for the home run, I'm just trying to be consistent. And if I'm consistent for a long period of time, then occasionally I will get these lottery type trades. So I think this is going to be a fascinating webinar, and I think most folks will get a lot out of it. It certainly will help you. I think will sharpen your risk management toolkit, so to speak. All right, so come and join us next week. All right, Gene, I think that's going to end it for today. Thanks for helping out. Until next time, folks, the best of health, manage your risk, and the good of all trading.